Hi, this is the Keiser Report. I'm Max Keiser. Markets, finance, scandal, the real economics, the real global economics. Yes, we're building a new global economics. Let me give you an example of this. And by the way, later on in the program, I'm going to be talking with economist Stephen Keen. And before I bring Stacy Herbert on, let me talk a little bit about my new economics, my new global economics. What we learned last week was that Barack Obama, President of the United States, let's play a little video of Barack here. He's talking to the cadets at West Point. He wants to send 30,000 more troops to Afghanistan to make sure, effectively, the point of this is to make sure that Goldman Sachs gets their record Christmas bonuses next year. Now, some of these soldiers won't come back alive. So, is there an easier way to make sure Goldman Sachs gets their money? Do servicemen need to lose their lives? Not necessarily. Here's an idea. Hold a lottery. Every one of the 330 million American citizens buys a lottery ticket for $57 to create the necessary $20 billion pool of money needed to pay the Goldman Sachs market rigging bankers doing Satan's work down there on Wall Street, pay their Christmas bonus next year. The winner of the lottery gets 1 million Goldman Sachs shares, valued at about $160 million, paid for by some additional Obama bucks loaned into existence by the charlatans and financial terrorists at the Fed and the Treasury, Bernanke and Geithner. This would avoid the pretense of sending 30,000 troops to Afghanistan as a way to launder a few trillion through the Pentagon and various military contractors, as a way to launder billions in lobbying money spent to get Congress to change finance and anti-war profiteering laws, as a way to channel that $20 billion in Christmas bonuses next year to finance Goldman Sachs and their financial terrorism and war profiteering. Obama, please, just give Goldman Sachs bags of money and we can avoid the body bags. It's that simple. Alrighty, let's look at some of the big stories this week. I turn now to Stacy Herbert.
Max.
Stacy, yes.
Hello. Well, we could avoid the more body bags in the global economy, actually. Economies blowing up around the world. But before I get to the debt devastation, I want to show you two pictorial headlines this week that really epitomize all that has gone wrong with the global economy. The first one, iPhone app for worshipping Ronald Reagan.
Oh, an iPhone app for worshipping Ronald Reagan. How does it work?
Well, I guess it's an iPhone app that you can download various images of Ronald Reagan. But this goes with the whole cult of deregulation and letting the market decide everything, no regulation whatsoever, even over fraud, as Alan Greenspan famously said that he doesn't want to regulate fraud.
Well, I often said that the only thing left after America's collapse would be a 24-hour cable channel with Ronald Reagan speeches in some landmass between Canada and Mexico. But I guess now, the internet age with iPhones, it's an iPhone app. So my prediction looks like it's coming true, but the technology is slightly different.
The next headline, and it's a picture of too big to fail. This is a vanity plate, allegedly for the vice chairman of Morgan Stanley, one of the
war profiteering financial terrorists, yes.
One of the giant investment banks in America that happened to have been rescued by the U.S. government. Now, the headline is the thing that's really interesting about it. Wall Street banker's vanity license plate would get an auto executive tarred and feathered. And this is what you've really seen in the last year is that populations, governments, nobody seems to care that there's a so-called socialism, this unlimited funds to bail out bankers. But had it been any worker group or industry or manufacturing, the riots would have been giant, that this was a contradiction to the tenets of capitalism, to what Ronald Reagan had promised us, the shining light on the hill. You can't do that, but you can bail out bankers.
Right. That's the dichotomy that's splitting America into two and creating these massive wealth and income gaps, is that bankers are doing God's work and workers who actually work for a living are treated like crapola. I think I can say that on this show. But this is an interesting license plate. Basically, they could say also that they steal with impunity. Then why don't they just say the license plate, I steal with impunity. I work at J.P. Morgan. I steal with impunity. My name's Jamie Dimon. I steal with impunity.
Well, it is like the equivalent of the let them eat cake of this era. But now we go to the international headlines of this notion of too big to fail and deregulation all over the world. In wake of Dubai trying to predict the next blow up. So, in the last year and a half, 2 years, we've had the blow up of consumer debts, bank debts. And all of that debt, bad debt, was transferred to the governments of the world. So now the predictions are which are going to be the governments that blow up, the sovereign debt crises. And it's not just the Latvias and the Ukraines and the Greece and the Italy or the Ireland and Spain. People are worried about the giant economies.
Right, so the consumer racked up trillions in debt. Then the consumer couldn't pay those debts anymore because they don't have jobs, because the jobs all got outsourced to other countries. But instead of letting the economy retract in a normal recession, they simply moved all those debts to the government's balance sheet, which effectively made the consumer liable to those debts anyway. Yeah. But now the governments are standing in line waiting to declare default. And we saw this in Dubai, of course. It looks like they're going to declare default. My understanding is that the same problems are rife throughout the entire Middle East.
Well, all over Europe as well. So The next headline, Angela Merkel alarmed by worsening credit crisis. So the German government is rushing through a fresh package of measures to shore up ailing banks. Now, they're saying the Bundesbank revealed that German banks face a further 90 billion euros in write-downs and bad debts. So for the first time, the German government is actually considering creating one of these bad bank sort of situations. They're going to take 10 billion euros of toxic assets and transfer it to the German taxpayer.
What's really sad about this is that Germany actually has a functioning economy with exports, but they unfortunately were hoodwinked into buying Wall Street's junk collateralized debt obligations and credit default swaps that have ruined their banking system. So they were also prudent over there in Germany during Oktoberfest, being prudent little Germans, saving, working, buying gold. And yet they thought that Moody's AAA rating or that S&P AAA rating for that junk collateralized debt obligation was worth something. Ha ha, Germany, now you've got to pay through the nose.
Well, up until just recently, or even still now, German debt, sovereign debt, is trading better than U.S. debt. So they're likely, their risk of default is the lowest in the world. But the next one, the next headline, Morgan Stanley fears UK sovereign debt crisis in 2010. In a client note by Morgan Stanley, they write, in an extreme situation, a fiscal crisis could lead to some domestic capital flight, severe pound weakness, and a sell-off in UK government bonds. The Bank of England may feel forced to hike rates to shore up confidence in monetary policy and stabilize the currency, threatening the fragile economic recovery. So they predict that UK sovereign debt may actually become more expensive, the borrowing costs, than even Italy, Mexico, or Brazil.
Right. Well, that kind of makes sense because looking back over the past few years, Stacy Herbert, and the phantasmagorical growth of the highly leveraged derivative markets, the concierge for the global derivatives market, the market maker, the venue of choice for war profiteering, derivatives wielding, weapons of mass financial destructing bankers was the city in London. And, of course, they outsourced all their meaningful manufacturing jobs, and they only kept the concierging, arbitraging, hedge fund wielding psychopaths. And now that they've blown up, British pound, of course, already crashed against the euro. Yeah,
it's down deep double digits. But they are the butler to the global financial...
Jeeves! Oh, Jeeves! I need another $5 billion for my hedge fund, Jeeves!
Well, it's far more than that. The next headline, $850 billion. Official cost of the bank bailout in the UK. So it also reads at $1.4 trillion in bank bailouts for the UK.
Yeah, and the UK economy is only about between 1 and 2 trillion to begin with.
Yeah.
So that would be like another 15 trillion or 12 trillion for the US, depending on how you value these things now. I mean, nobody values them in an accurate way, inclusive of debt. So it's all fudgeonomics, but it's a smaller economy, let's say that. And it looks like the UK pound is going to go the way of the Icelandic krona. The Icelandic krona. It's Reykjavik on the Thames. The BBC logo won't even come up over the Thames anymore. It'll just go...
Well, the £850 billion includes the cost of capital injections, loans, and guarantees. It amounts to a total of £40,000 per British family. But the actual cash outlay that has been spent is £131 billion.
They're going to be rationing Marmite over there pretty soon. What, did they ration Marmite in the 70s when the IMF had to bail out the UK?
Well,
yeah. I mean, they discovered North Sea oil, and that was a huge burst of so-called Thatcherism. They were out of North Sea oil. Now they're back to basically a second world country. You know, the empire's gone. Hello.
So that brings me to the final two quick headlines.
Oh, yes, yes. What more, Stacy Herbert?
Defiant banks pay million in bonuses.
Of course.
And pay cuts helped save $2 million from unemployment. So on the one hand, you have the bankers. On the one hand, you have the people who are basically own the bankers via the bank bailouts. So you have the defiant banks are collecting massive bonuses now in the UK, and the Treasury and Gordon Brown pretended they were going to stop it, but they've backed off of the last weekend. They say they're not going to stop the bonuses, which are up 50% on last year. In the meantime, 2 million Brits have either cut their hours at work or cut their pay.
It's like Alistair Darling is like Squeaky Fromm. Remember from the Charles Manson murders? You know, he's like being held captive by the hedge fund managers. Alistair Darling, grow a spine! Why are you giving in to financial terrorists? Appeasement is not a policy. Reviewed Lord Chamberlain and the Nazis. What the heck are you doing? Well, you know, these people are going to end up with these UK citizens are going to end up with a handful of sand, which makes them exactly similar to the people in Dubai who are going to get a huge beachfront property as soon as this bond defaults. They're getting some big acre or parcel of land of sand on the waterfront, which was last year valued at $4 billion, and I think this year is valued at about 37 cents.
That's right.
Is that it?
That's it.
That's all we're talking about? All right, Stacy Herbert, Keiser Report producer, thanks so much for being once again on the Keiser Report.
Thank you, Max.
When we come back from the break, I'll be speaking with Stephen Keen, economist from Australia.
Every month we give you the future. We help you understand how we'll get there and what tomorrow will bring. The best in science and technology from across Russia and around the world. Join us for Technology Update on RT.
Okay, welcome back to the Keiser Report. I'm Max Keiser. I'm here with Steve Keen, professor of economics at the University of Western Sydney. He's the author of Debunking Economics, and he's only one of 12 economists in the entire world that predicted the crash. Welcome to the Keiser Report, Steve Keen.
Good to be with you, Max.
Let's get right into it, Steve. I mean, you are one of only 12 people in the entire world that predicted the crash. So let's delve deeply into this with one of the guys that actually figured it all out. Now, Steve, a well-functioning economy needs a certain velocity of money. The money needs to keep flowing, in other words. Otherwise, you have deflation. Does having an ever-increasing concentration of wealth in the hands of fewer and fewer cause a collapse in the velocity of money?
Yeah, this is one thing which Milton Friedman very strangely was actually correct about. He's wrong about 99% of stuff, but he's right about the importance of the velocity of money. And if you have an economy with a certain stock of money turning over at a particular speed, that's the level of output it can support. And if you then have a transfer of wealth from those who have to spend it very rapidly, like workers who turn their money over basically 26 times a year, and it goes into the hands of the Bill Gates of the world, not that he's one of the worst capitalists by any means, he actually produced something, then they spend far more slowly than that, turn over their accounts once every 10 years, you actually slow down the rate at which money is turning over and the level of output it can actually support.
Okay, when you talk about output, another word for that is GDP, right?
Yeah, it's
people
real
call
stuff.
GDP, that's the growth of the economy, and the velocity of money. This is money that is made available to the banking system, and the theory is that the banks then loan it out, and it goes through the multiplicity of money, which is the velocity of money, and this, as you say, increases output or GDP growth.
Yeah, it can also inflate asset prices, which is the mistake we've made for the last as well.
So during the last 10 or 15 years, asset prices have increased as a result of this velocity of money, and what we saw in the summer 2007 is that this velocity of money basically peaked. You had peak credit, if you will. So this means that there's less going through the system, and asset prices start to sink.
Yep.
And Obama, his theory, of course, was that if he gave all that bailout money to the bankers, that they know all about velocity of money, and that would increase the economic activity, but that hasn't happened.
Well, they know bugger all about the velocity of money. They know bugger how money is actually created. They teach myths about it, and unfortunately Obama swallowed one of those myths. And that goes that if you want to actually create money, what you do is the government creates, say, $1 trillion, gives that money to the banks, and the banks then lend that out. So the first bank gets $1 trillion and hands out $900 billion in loans and hangs on to $100 billion. And the
That's
next bank,
fractional reserve banking system.
And it's not how money actually works. And I can give this, it's a complicated story, but the simplest way to explain.
Okay, this is probably one of the most important aspects of your work of the past year. You're about to get into this, so listen very carefully.
What is obviously wrong with that is that if it did actually work, what would have to happen is Americans who are currently $43 trillion in debt would need to become $52 trillion in debt. Because the idea is you have a $1 trillion injection of government money. The money multiplier then creates an additional $9 trillion worth of credit money, but it also has to create another $9 trillion of debt. Now, we already know the American economy is struggling beneath $43 trillion worth of private debt. It can't finance it. It's sinking.
And that includes the unfunded liabilities?
No, not even counting.
Okay, what does that include?
That's household debt, business debt, both financial and non-financial businesses. The sum's about $42 to $43 trillion. Now, if this money multiplier was going to work, they would have to have happily accepted another $9 trillion in debt. And the American economy currently has a debt-to-GDP ratio of about 300%. It would need to go to about 375%. Now, that's ridiculous. The economy is already struggling below a load of debt it can't solve.
So the national debt level they quote of 11 trillion, 12 trillion that's understating.
That's
strictly government debt.
Yeah.
Add on top of that private and corporate debt, and you get that.
This is another weird thing that conventional economists do. They obsess about the government level of debt because they regard anything government does must be bad. And they don't worry about the private sector. Anything the private sector must be good. Now, that's nonsense. There's good stuff the private sector does, like borrowing money to build an iPhone or borrowing money to build a new line of tankers or whatever, actual physical product. But the private sector also borrows to drive up the price of bonds and shares, and that's wasteful, speculative, Ponzi behaviour, and that's where the large part of the debt has come from. Now, of course, once you've got in that level of debt, you can't handle anymore. So even if the money multiplier accurately described what would happen, nobody would want to borrow that money, and the banks wouldn't want to lend it, so it won't work.
So it's like the old joke, the guy who's selling donuts and suffering a 5-cent loss on every donut, but figures he's going to make it up on volume.
Exactly, yeah. It's a fallacious theory, and you apply a fallacious theory in the real world, you get a disaster.
Well, I remember during the dot-com era, back in the late 90s, I was in Los Angeles. I started at dot-com, and we were told by our banker, Bear Stearns at the time, is no longer with us, but they were saying our valuation was higher because our rate of losses every month was very high. So based on the rate of our losses, that implied a certain amount of growth.
Yeah.
And so based on that, they thought the company, which had no profits, was worth $200 million. Yeah. Before the crash of the dot-com.
I hope you sold in the meantime.
Well, that's another story. But so in other words, that same thinking is carried over to this, the takeover of the economy, the coup that happened with the investment bankers took over, and they apply the same fallacious thinking that you can simply keep increasing debt ad infinitum as long as you never account for that debt. You have growth for as far as the eye can see.
That's right, but it's growth which is entirely based on leverage of asset prices, and when you make something more expensive, you don't produce anything. Well, your thing about volume is a classic instance. Economists have mistaken rising prices for rising output. Making something more expensive doesn't produce any more of anything, let alone when it is just pieces of paper, certificates of shares and bonds and stuff like that. So we've actually got ourselves caught in a speculative economy, and the end of a speculative economy is always a crash. You simply can't continue it on forever.
Right. So you have this deflation, which is the peak credit phenomenon. You have asset prices, which are stocks, bonds, commodities. They are, and real estate, of course, is the key commodity in this equation. That's deflating in value, which is unwinding the Ponzi scheme of this global debt-fueled bubble.
Yep.
And the policies in Washington to just add more debt onto the debt bonfire is just exacerbating the problem. Yeah,
so they've got two ways they can add more debt. They can encourage the private sector back into borrowing money yet again, when the American economy already has households that owe 100% of GDP as their debt level, same in Australia, funnily enough. and they then get themselves more leveraged and have to promote more of their income, whatever interest rates might be, they've still got to devote more of their income to servicing that debt, and it's going to take them more years of their own lifetimes to pay it off. So you actually reduce their ability to actually consume, and that suppresses the real economy. Or they do the stuff which they did in Japan, and I'm really talking about the phase we're going into now being zombie capitalism, the same as in Japan, keeping alive the zombie banks, where the private sector is so badly in debt that nobody wants to borrow or invest in the private sector, and the government sector is going into more and more debt to try to encourage growth that way. And you've got, in effect, the private sector's deleveraging and taking money out of the system. The government's leveraging and putting it back in again. You're getting a balance, but it's a balance below the baseline, which will actually give you economic growth. And it's not solving the problem.
They love capitalism on the way up, but they hate it on the way down.
Exactly. That bloody time the relative goes both ways.
Right. I mean, cowboy up, capitalists. You know, take it like a man. You know,
occasionally there is a real Indian. Occasionally you take an arrow.
Occasionally you take an arrow, or a 9/11. But let's talk a little bit about the Weinbach machine back to the end of 2008. Hank Paulson decided to get $700 billion from Congress, and this was really a key moment in this fallacious policy maneuver that was the Bush-Obama kind of holdover there. Let's go back to that moment. What would have happened had he let the banks fail, or is that one of the possibilities, or what could have been a possibility?
If the banks failed, that would have been a good thing. The banks would have failed and been nationalised. They were bankrupt. They'd followed a totally fallacious business model to its conclusion, which meant they basically had zero equity, zero worth. They should have been nationalised. And there's a dirty word in America, but it's a sensible word after a crisis like this. And they should have been forced to do the only thing that banks should do, but in fact most American banks don't even do it anymore, and that's lend to provide working capital to real firms. That's the one thing they should be doing, which they've completely ignored, and they've got themselves totally up in this Ponzi scheme. So they should have been nationalised, the bondholders should have been wiped out, the shareholders should have been wiped out, and people who are in debt should have had their debt reduced to a level at which would have been sensible in the first instance.
Right, so give the money to people who actually know how to make real businesses, maybe manufacture a few things.
Yep.
And let me ask you this, the total cost, if I remember correctly, I'm just going to throw some numbers out here. Going back to that period now, I think that there was a figure that all the credit card debts in America and all the mortgage debts in America could have been wiped off the face of the balance sheet for $11 trillion.
Exactly.
Okay.
That's pretty much right.
So, in other words, Obama has spent roughly, depending on how you calculate this, between 13 and 20 trillion. So, in other words, he could have simply taken that money and wiped clean every mortgage and credit card debt in America, and at the beginning of 2009, everyone would have had a house fully paid for and credit cards with no debit balance.
At the same cost of this ridiculous rescue they've done so far, which has just kept the vampires and the parasites alive.
At the same cost? At
the same cost.
Now, the huge debts that are on the bank's balance sheets, you could have systematically dealt with them over a period of years by nationalizing or by sending in, like during the savings and loan crisis, they created the savings and loan workout fund. I forget what it was called exactly, but they worked through this crisis, and they took 5 or 10 years, and they were able to kind of trade their way out of it over 5 or 10 years.
Yeah,
that could have been an option.
It would still be tough, because it isn't just that we've had this period of financialization that has bankrupted America effectively. We've also had deindustrialization going on at the same time, so that even if you manage to get rid of the damage that's been done so far in terms of the accumulated debt levels, you've still got an economy which is essentially what's known as the FIRE economy, finance, insurance and real estate. What you've got is a whole bunch of people who've got no skills. They're called financial managers, bankers, etc., etc. They don't know how to do anything productive. If you then sack
I worked on Wall Street myself for many years. I know exactly what you're talking about.
Well, if you sacked all that lot, frankly, they'd be better off not working than doing the jobs they're doing. Where are you going to employ them? The factories you'd like to put them into, which were there in the 1930s when we made the same mistake back then, the factories were actually in Pittsburgh and Philadelphia and Chicago and so on. Now the factories in Shanghai and Sichuan and so on. You'd have deindustrialized, and you have about 20% of your population who can't do anything productive that you've got to find a job for. That is going to be painful in anybody's language.
So, in other words, America is turning socialist anyway, because these policies by Obama have basically socialized the biggest component of the American economy, which is finance. And so the biggest economic component of the American economy has been completely socialized. It is socialism right now. So when a politician comes along, like a Sarah Palin, for example, and she's her views that she espouses are just more of the same socialist policies going forward.
Yeah, well, America's got a lot of really weird hang-ups over words. And they're anti-nationalisation, they're anti-socialism, blah, blah, blah. They're anti-really understanding because they have a knee-jerk, unfortunately, I'm sorry, mate, I'm not knocking your nationality here, but there tends to be a knee-jerk reaction to trigger words that are associated back to memories of what happened back in 1870 and 1917. You've got to stand back and say, how does the system actually function and what the hell have we done? And when you look at where you got to, you think, we would have been, this is not capitalism. This is not the industrial entrepreneurial 1950s engineer-dominated capitalism that actually made America great. It's a bunch of Ponzi scheming, carpetbagger personalities that have driven your economy down and deindustrialised you at their own aggrandizement in the process. And that's what you've got to realise in reverse direction. And it's them saying you can't use those nasty words is actually stopping you making the correct analysis and changing course.
So now we have to look forward for what you see happening in 2010.
I think it's the beginning of what I'm calling zombie capitalism. It was crazy for me watching American commentators in particular attacking Japan back in 1990 and saying they're doing the wrong thing, you should let those banks fail, write off the debt, deal with the whole thing, get rid of the zombie banks, and don't for God's sake try to stimulate your way out of it. What are we doing now? Keeping the zombie banks alive and trying to government stimulate a way out of the crisis. So it will work in the sense it will slow down the decline caused by the private sector deleveraging, but it won't address the core problem, which is the massive level of over-indebtedness of the private sector, and we are trying to honour debts which were dishonourable in the first place, as you know. So they're going to be trapped where the government's pushing the economy up, the private sector's pulling it down, it'll bounce along, it will never get to the level of growth they're expecting. People like Ed Lazar, who was Bush's Council of Economic Advisors chief in 2006 to 2009, told me he expected to see a 5% or better rate of growth next year.
Is he a zombie?
He's a neoclassical economist. That's pretty close.
All right, we're going to have to leave it there. Steve Keen, economist from Australia, one of 12 economists in the world that actually called the crash. Thanks so much for being on the Keiser Report.
You're welcome, mate.
And that's going to do it for this edition of the Keiser Report. If you want to send me an email, please do so at this address, keiserreport@rttv.ru. That's keiserreport@rttv.ru. Until next week, this is Max Keiser saying, bye, y'all.